Hey, it's Jack from Jack Gately Real Estate and the Online Real Estate Academy. Thank you so much for joining us today. I wanted to take a deeper look at the University of Michigan Consumer Sentiment Survey that came out at 10 o'clock today. We were live earlier this morning for the jobs report, which was very, very interesting. But I wanted to take another look, a deeper look with you about the sentiment survey. So later in this video, we're going to talk about why I think that this sentiment survey might actually be good for incumbents, Biden administration, Democrats writ large. Not that I'm happy about that, but admittedly, objectively, you've got to say that maybe their message is starting to get through, or maybe because of events, things are starting to move in their direction. We're going to talk about that later in this video. We're going to listen a little bit to Rick Santelli's surprise on the numbers. But first off, let's take a look at exactly what the financial press is telling us this afternoon with these numbers here. So let's bring that up for you here. If you look at the headlines across the financial press, everyone now is calling for a soft landing. Economy soft landing comes into view as job growth slows. Everyone has gotten the message that this is all about a soft landing. Barron's, aren't they owned by Wall Street Journal anyways? But nonetheless, labor market still looks on track for soft landing. Meanwhile, many of us are still living paycheck to paycheck. That's bad for the economy. Retail slashes nearly 40,000 jobs. So one of the other videos, maybe I'll do this tomorrow, would be a deeper look at the jobs numbers that came out earlier today. We kind of just did a cursory look at the jobs numbers, but a deep look at that report. Very interesting report. A lot of growth in healthcare, a lot of growth in government jobs. Unfortunately, the retail sector took a major hit, and we had a artificial boost of about 30,000 jobs that came because of people going back to work from the writer's strike and the auto strike. And so when you look at that 199, 198 report, it really boils down to a more like a 168 report. And remember, the month before was 150, and I think the moving average or something like that is 187. So I think, you could look at that as a 2 months in a row below the moving average, if you want to look at it like that. Financial Times. We're going to talk a little bit more about the Financial Times in this video. They have a chart out there with Charles Payne took extreme exception to. U.S. economy added 199,000 jobs in November. Unhedged, the labor marketing soft landing. There you go. Everyone's got the memo. This is a soft landing. Over here at the Real Economy blog, this looks like what a soft landing. You get the idea. Yahoo, what a soft landing looks like. Everyone's on board. This is a soft landing, theoretically. Now, let's pull up Santelli, and you'll see the surprise on his face, and then we'll get into a deeper dive, more than just Santelli. Go ahead, Rick. Let's watch this here. Oh, they're going to play an ad for us. Oh, boy. All right, we'll wait for the ad to play, and then we'll come up in 9 seconds. 9 seconds. We're not going to give these people fresh an ad for free. We're not going to give them an ad for free. Okay, here we go.
Since that was out just moments ago, Rick Santelli has those numbers for us. Rick?
David, there are some significant surprises here on University of Michigan. Now, granted, these are December preliminaries, so in a couple weeks they'll change, but every metric here.
It seems like always, and this is not a government number, but always things get revised, right? You get the top line government number, and then when the number gets revised the following month, it's always lower, right? Yeah, you've seen that trend during this current administration.
It's kind of wild. Okay, let's first take the headline number, the sentiment number. It's 69.4. Last look was 56.8. So we basically have jumped to the best level since July. If you look at number 2, which would be current conditions, our last look was 68.3. Zoom, zoom, zoom. The 74.0, the best since August. If we look at the future expectations, 56.8 was our November final. 66.4, That's the best since July. It doesn't end.
So let's one time look at this here. We are looking at November to December. The numbers, of course, they reflect the prior month. 69.4, that's up 13.2%. 74.0, that's up 8.3%. 66.4 on consumer expectations, that up 17% month over month. And these numbers are incredibly strong. That's why everyone is spinning the fact that this could be a soft landing. And for those of you who aren't aware, a soft landing is when effectively the Fed has dialed down the economy, but only enough to kill inflation without actually killing jobs, right? So this would be because their Fed is so good at understanding and anticipating what the market is going to need and want.
If we look at 1 year inflation, well, 3.1. This is the volatility in 1 year inflation by these respondents is off the charts. It was 4.5%. Our last look, that was the highest since April of this year. It drops down to 3.1, which is the smallest. To find a smaller when you have to go to Jan of 2021 to equal 3.1, you go to March of 2021. And
all right, so he's just swamping you with numbers at this time. He's very excited, Mr. Santelli, as he should be. So when we get down in here to the comments by Director Sue, consumer sentiment soared 13% in December, erasing all declines from previous 4 months, primarily on the basis of improvements of expected trajectory of inflation. In other words, the consumer has gotten the message that inflation has declined, and they don't expect it to go back up to 9% like it did in the summer of 2022. They understand it's still higher than the 2% goal of the Fed. You know, we're at 3.5, 3.7, depending upon which number you want to take. But they don't believe it's going to go back. And of course, we have had a huge turnaround in, let's just say the 30-year mortgage, right? Because we were in mid-October at 8%, and now we're down at 7.1 or even a little less than 7.1. That's a huge turnaround in inflationary expectations, as the director here at the University of Michigan mentions. Sentiment is now about 39% above the all-time measured low in June of 2022. That's when inflation was spiking, you might remember, but still below pre-pandemic levels. So I think I have a chart for that. I just want to show you some perspective here on the whole situation with this inflation situation. So let's see if we bring up this chart. We might have to zoom it back out again. Let's bring it up here for you. So when you look at expectations, or sentiment, I should say, when you look at sentiment, yes, we are off the bottom from June 2022, which would have been the low spot here. It had not been down to these spot since like, say, back in 1980 or so. And yes, we have bounced off the bottom from there, which is great. But we are nowhere near the sentiment that we had in January of 2020. Nowhere near that. We were back up at that time. The number in January of 2020, to slide this over here, was somewhere about 100, upper 90s. And now we are in the mid 60s. We are way off of the overall consumer sentiment that we were at pre-pandemic. So yes, we're off the bottom, but we are nowhere near where we were. And so I think so much of this has to do with how you frame the statistics. If you're looking, we're going to talk about later in this video, if you're looking year over year, we're doing pretty good. Because when you look year over year to November, you don't include the huge spike in inflation that we had in the summer of 2022. And therefore, year over year numbers look pretty good. But if you do like a 2-year comparison, not looking that good at all. If you do a 3-year comparison, not doing that good at all. And, the presidential election is usually asks the question, are you doing better now than you were 4 years ago, right? The quintessential Ronald Reagan question. Are you better off now than you were 4 years ago? That is the effective question of any presidential election. It's the economy, right? And you got to just ask yourself, when people ask themselves that next November, a year from now, there's not going to be a lot of people, if we had to fast forward ourselves between now and then, who are going to say yes. There's not a lot of people who say yes. A growing share of consumers, about 14%, spontaneously mentioned the impact of next year's elections. Sentiment for these consumers appear to incorporate expectations that the elections will likely yield favorable results to the economy. I wonder what they mean by that. I've read that like 9 times preparing for today's video and couldn't really tell you what that means. Year-end ahead inflation expectations plunged 4.5% last month to 3.1 this month. So people are not believing, people think that the inflation thing is over. And if that is true, well, then that would be great, right? But if it ends up that inflation goes back up, there is going to be one hell of a backlash on the political side of things. If people think that inflation is over now and it comes back, you thought they were angry in the summer of 2022. If this thing comes roaring back, there is going to be hell to pay from an electoral point of view. Again, if we look at the chart from 50 years, you will see that, yes, we've bounced off the bottom, but we are nowhere near where we were pre-pandemic. Current economic expectations chart, that will show you a similar story where we have the sentiment relative to current economic expectations, or conditions, I should say, conditions. Once again, we bottomed out in early or late 2022. We've bounced back a little bit, which is great, but we were nowhere near where we were pre-pandemic, 2019-ish. Nowhere near that. We are currently in the about 70 range, and 74, I think it was. And prior to the pandemic, we were about almost double that. Or no, excuse me, 40-50% higher at 115 or something. Someone do the math for me there. Even the number in late 2022 was lower than the number during the great financial crisis. So we are coming off the bottom, and the bottom was the lowest ever. And that was just last year. So if you look at some of these Bloomberg charts, you can see, especially, I want to go down to this one about the political situation, since this video's had kind of a little political flair to it. This is consumer sentiment by political party, according to Bloomberg. All courtesy to Bloomberg and to Zero Hedge for providing the chart. This is a very interesting chart, and that's why I think this is actually, if you're at the Biden White House right now, or the Democratic National Committee, you're reading this and you're like, this is actually pretty good news for us, in that Democrat consumer sentiment is at 91, is a reading of 91. Now, prior to the pandemic, it was at 120. So still, the Democrats are not as happy with the economy as they were prior to the pandemic. So there's that. Independents are down at 59.1. 62.1. I misspoke. And so the independents definitely are more pessimistic than the Democrats, and the Republicans are just about the same score as the independents. So that is very interesting. They're at 59.1. So independents and Republicans are almost at the same rating. Well, let's just call it 60. Makes it easy. So they are both about 2/3 of the rating of Democrats. If Democrats are at 90 and Republicans and independents are at 60, then you could cut that a couple of 2/3 is optimistic. All three of these ratings, as I mentioned, are way below the 120 range that it was prior to the pandemic. However, when you start to see these numbers move up as they have during 2023 and especially recently in December, if you're in the White House and you're saying as we moving into 2024, an election year, you've got to say, oh, people are starting to get the message. Inflation's not as bad as it was. Inflation's not going to come back as we thought it was. And they're starting to hear the, what do they call it, Bidenomics message. And if you're a consultant in the White House, you're going to be like, okay, this is good news for their electoral prospects. However, notwithstanding those numbers, we have some other numbers out there that are about from the same time frame, late November, and they're indicating that people are not getting the message. And here is a tweet here from Ian Bremmer, and he is tweeting out a Financial Times chart. Americans are adamant that U.S. economic circumstances are getting worse, and they're wrong. Let me just tell you that no matter how right you may be, telling Americans that they're wrong is not a good political strategy. Not that the Financial Times is running for office, just, putting it out there. So this is a poll from Focal Data, and it was from 2,200 American adults in late November, and the chart is from Financial Times graphics. You can tell by the color in the background, their telltale color. Share of U.S. adults who hold each view by whether the view is supported by the latest data. Prices have risen faster than wages. 90% of Americans believe that, but they're wrong. It's the incorrect answer, according to the Financial Times. Inflation has risen in the past year. 73% said that's true. And according to the Financial Times, 73% of the Americans are wrong. Here's the important thing I want to talk about in terms of inflation. Remember that inflation, if I want to say this correctly, the rate of inflation has declined, but inflation is still there. A lot of people out there get this term wrong. They are saying disinflation. We are not in a deflationary period right now. We still have inflation. It's 3.5, 3.7-ish, somewhere around that number. That's still inflation. It's just that it's not increasing at the same rate as it was in the summer of 2022. That doesn't mean it's gone. And it doesn't mean that the hike that we had in the summer of 22 doesn't exist anymore, right? That's ludicrous. I mean, what type of basic economics do these people take? So, right here, Financial Times is wrong. The inflation has risen in the past year. See, that's really, how do I want to say that? A deceitful question. Yeah, I'm going to say, having written poll questions myself in the past, that's a deceitful question. Are you wealthier than before the pandemic? 67% said no. That's kind of like the same question. Are you better off now than you were 4 years ago? Now, you might theoretically be wealthier and you might have more dollars, but those dollars might be worth less money, right? If you have a stack of, if you had $100 and now you have $110, but inflation was 120%, are you wealthier? No. Right? Just kind of throw it like you do a math problem. Not that I wanted to throw a train leaves Chicago question at you, but just that's obviously math. Obvious math. Could you afford a better lifestyle than a year ago? 63% of Americans say no. According to the Financial Times, actually, you're wrong. So Charles Payne, the Fox News personality, smelled this out, and he's like, I'm sick of the media mocking folks about their struggles. 1-year parameter is a trap and it's disingenuous. That's exactly right, Charles. And what they're doing here, if you look at the fine print on this chart, thank you so much for pointing that out, Charles, is they are looking at data year over year. I think they mentioned that somewhere here. Anyways, inflation destroyed wages for 2 years, at least 2 years, Charles. Home ownership and rent costs are off the charts. Poverty threshold is far too low. This is specious bullshit. Thank you, Charles, for speaking truth to power. That's right. And when you're running a campaign, you're not going to run a campaign and saying, are you better off today than you were last year? You're not that. No, because you're not elected on an annual basis. You're elected as a president every 4 years. You're going to say, are you better off now than you are 4 years ago? It's a really simple question. Almost every presidential election comes down to that question. And this is the fundamental question for next year. By the way, I just want to take a quick look at for you and see where our mortgage number rounded off at the end of today. It did go up a little bit, 0.04. It bumped up. It was 7.05, and now it's 7.09 because the number in the conventional wisdom looked a little bit hot. I'm not sure if that will maintain going into Monday. Now, we have a very interesting financial week of news next week where we have a very important CPI number coming out Tuesday. I think I'll be live for that Tuesday at 8:30, I believe it is. And then on Wednesday, we have the Open Market Committee and then a Fed speak at 2:30. Powell speaks. I think it's 2:30 on Wednesday. So until then, we'll see you. By the way, a little upgrade in the studio here. I hope the signal is a little sharper and the picture is a little sharper. We'll find out. I'll test it out. Until then, you have a great weekend. Go make some money. Have a great day. Bye-bye.